Hey everybody, Tony here with a different kind of lesson I will be doing for the week of September 18th. It's not really, a different kind of lesson, more so I decided to start a series where maybe I do, 5 episodes per series covering different topics. It's gotten to the point now, guys, where I've done so many lessons and covered, so much material on stuff I feel like that, or stuff I feel that I'm, pretty well versed in. That I think it is maybe time to, go back over some of that stuff, and I would like to do this with a little bit longer of a video instead of, I try to keep the videos around 5 minutes. This one may be a little bit longer. And like I said, this is part 1 of the series. And first off, I will be covering supply and demand. And, like I said, I plan to, cover different topics. I also plan to try to cover some stuff that I might not know a whole lot about, but that will give me something to kind of educate myself on, and then perhaps cover that as well. So, like I said, this first episode will be, this first series will be about supply and demand. This is the first episode for that. In each episode, I'll be covering different parts of each topic. In this first part, I'm going to be covering, this is the basics. So if you have a grasp on supply and demand, this may not be the lesson for you. If you do, but you kind of want a refresher, you might find some, use out of this. And this is, catered towards somebody that may still be struggling with supply and demand. I'm hoping to cover, any questions you may have. So first, what is supply and demand? Like I said, most of you probably know the answer to this already, but essentially supply and demand are areas within a chart that we use to either go long or short, and these areas are essentially support and resistance zones, not a finite number. Now, that is something I have written down for this first lesson. I get the question all the time, we see it. People will argue that supply and demand and is useless because it's the same thing as support and resistance. While that is true, I totally don't agree with the sentiment that supply and demand is useless. I think it's way more important than just support and resistance lines. And the reason for that is supply and demand zones give you like in the title, a zone or a range that you may see price action either bounce, reject, or maybe break through a level and flip a zone. So, that's how that differs from support and resistance. Now, how are these zones formed? Well, essentially, these zones are formed through what we call an imbalance between buyers and sellers, and this imbalance between buyers and sellers is what creates these zones. Now, in a further or in a future part to this series, I will cover, the different types of zones. Some zones are much stronger than others, while others are much weaker than, maybe a certain zone. But these zones are created from an imbalance between buyers and sellers where they're fighting to take control. They're fighting each other, and eventually somebody takes control. Sometimes it creates an impulsive move, like we see here on what is this, SPY at 3:30, I believe, on the 14th. A pretty impulsive move which creates a zone, and sometimes like here, this zone here is a little bit smaller. This reversal, I'm sure, has created a zone. This is the 30-minute time frame, not too crazy of wicks here. So these zones differ in size all the time, but they are created from, buyers and sellers fighting and then one taking control over the other. So that's important to know. Another thing important to realize about supply and demand is this is what a lot of institutional traders and, players that are playing with big money, professional traders are using. They are using these supply and demand zones. They are playing around these zones. And some of these big money traders are the ones that end up creating these zones. So that is also important to realize. This is going to help you think like big players in the market. It's going to show you what they're looking at. It's going to show you where you may see a high probability to see an interaction with, price action. And this is, going to give you an advantage in the market. You want to try to, we all have heard the saying, think like big money. It is true though. You want to try and think like these professional traders, or see a chart as, a professional trader would, and see where they may potentially be looking to play around. Now, when it comes to just support and resistance, guys, the reason that this is advantageous over support, just a simple support and resistance line, like I can go in here, guys, and put a line. Let's say we don't see anything to the right here. Let's say, price comes down and we bounce, which creates a zone. But say I don't want to put a zone, and say, I'm being stubborn and I think perhaps a line, or if this finite line is good enough for me. If I see interaction with this line and bounce, I buy. Well, the issue with that is, guys, is we don't see it here, but you may see a scenario where, or you will see scenarios quite often where price action comes back down, but it ends up bouncing, maybe in the middle of this wick or towards the top where the candle body starts. So if you're waiting, and you're only looking to go long off a bounce from this low, the price may leave, it may leave you behind. You may not get a chance to enter this because it bounced in this supply or this demand zone instead of this, just support line you have drawn on your chart. So the reason that I think these zones are so advantageous is because it lets you, it gives you a higher chance to potentially make some money going long or short off a zone instead of waiting for interaction with a finite number. Another thing that I wanted to cover in this lesson, guys, is the fact that these zones don't always hold true. Like anything in the market, this is not by any means a guarantee. If we go in, let's get rid of this line. If we go in here on the 30-minute and we draw a demand, okay, and we see price start to pull back, and we're like, okay, what time is this? 10:30 on the 15th, the following day. We see price start to bounce off the bottom of the zone, and we end up going long. Well, within this next candle, guys, say this is a 5-minute chart. This breaks down below the zone. Maybe you get stopped out, but the reason that this zone is so important to play around is because it is offering minimal risk. There are going to be times, guys, where price action maybe cuts through a zone and then bounces right back, or breaks above a supply zone and flushes back down. That is just the nature of the market. That's the nature of anything in the market. Nothing is guaranteed. Nothing is for certain. But, we're trying to play probabilities. We're trying to look at something and be like, well, what are the chances that this bounces out of the zone? And even if it doesn't, what is the risk to reward ratio for this specific trade? If I'm going in and I'm looking to go long out of this zone, I simply place my stop below this zone. If price action, fails to bounce and busts below like we saw here on the 15th, then you get stopped out for basically as minimal loss as possible. that's where a lot of people run into issues. They are not playing around something like supply and demand zones. They're not playing around, EMAs, etc. They're just kind of buying in the middle of nowhere. And then once a trade goes against them, they don't have an area where, they either have a hard stop or they don't even have a plan if that trade goes against them. So that is the final thing I want to cover in this, guys, is these zones are offering you minimal risk in terms of waiting for an interaction with the zone, either long or short, and then, taking entry and being confident in your entry and placing maybe a hard stop below or above a zone in case something goes against you, and you have to live with it. Like I said, they're not a guarantee. There's going to be times where they just simply don't work out. You can see price action breaks below. And we break back through, and then here at, what time is this? 2 o'clock, what happens? We get a strong, aggressive move or bounce out of this zone. Price action does end up flushing through, but if you bought down towards the bottom of this zone, you made out pretty well. So it's important to keep these zones in and, not really get rid of them until, maybe you see a couple different moves through the zone. That's something I'll cover in a future part of the series. But like I said, guys, this is part 1. I know this is beginner. I know most people know, everything I covered. But it's never a bad idea to do a refresher, and it's something that I think is extremely important. So for anybody that's struggling with this or maybe still doesn't utilize supply and demand, this is for you. Any feedback on this lesson is appreciated, and like I said, part 2 will be out next week. I really hope this helps, and like I said, any feedback is appreciated. Thanks, guys.